Everybody has Visa.
It's pretty decent growth. We love red days. They still made money, guys. This is incredible. Visa is a company that I want to own for the rest of my life. Welcome to a beautiful down day in the market. It is February 21st that we're recording this video. The NASDAQ is down 1.73%. The Dow is 1.4%, and so is the S&P. We love red days. So for those of you who are new watching this channel, that's probably different than you hear from most people. We really embrace days that are down because our stocks either get closer to where we want to buy them or they're deeper into where we want to buy them and we buy more shares. But today we're going to do Visa. Why is Visa awesome? Well, Visa is a company that I want to own for the rest of my life. It is down today about 1%. This company, look at this, bottom line margin of 50%. Whew. That is a huge, that's after paying overhead and taxes. They make 50% of their revenue and profit, 80% gross margin. This is incredible. $30 billion in revenue. Look at this, Mo. Market cap of $421 billion. Enterprise value of $456. That difference is the debt. Only essentially $30 billion in debt. And in the last 5 years, their average free cash flow has been $13.5 billion. So $30 billion in debt with $13.5 billion in average cash flow. And last year's cash flow is $17.8 billion. If this is a lot to hear right now, I want you to just relax. Don't worry about it. It's harder to start, but think about everything else that you do in life. You probably do some things very well that are difficult, but you didn't start doing them well. But these are very easy concepts, and I guarantee if you watch a few of our videos, you'll become much better at this. So Mo, why don't you walk through a few of the pillars here?
So these are my favorite pillars to see. I mean, everything here is showing green except for my two valuation metrics that are saying, just based on the pillars, maybe it's a little bit expensive, but I love seeing 5-year average free cash flow is there, revenue growth is there, very high ROIC, almost 19.26%. Shares outstanding, I don't know about this one. I think we'll figure that out in a little bit, but they could pay off all of their debts in 2.15 years.
Of their last 5 years.
Their last 5 years of free cash flow.
So awesome. The 19.26% ROIC. What this means, guys, this is return on invested capital. The higher, the better. And what it means is these companies do a great job of getting a return on the money invested in the business. So if they want to increase their earnings, the higher the return on invested capital, the less they need to invest in order to get that increase in earnings. And that leaves them with more money to buy back shares, pay down debt, and do other things with the money that they can do to make the investment worthwhile and better for investors. Okay, that's the importance of this number. Now, is this good? Yes, we want 9%. A company like Apple is 37%. We just looked at Home Depot. It's like 50+%. So they're very, very high, and all the great value investors will tell you you want high returns on invested capital. Now, as you go through the software, we have a great special running right now, $7 for 7 days, everythingmoney.com. Check it out. It's $7 for 7 days. I guarantee you that if you sign up, you will love it. And if you don't love it, it's only $7 out of your pocket. So check it out. Now, some other things we want to look at. Analyst estimates for the company. Now remember, with a company like Visa, as inflation increases and causes goods to go, when you're swiping that credit card every single time, their revenue is going up with inflation. And what are their costs? Their costs are very low. We saw the difference between their gross margin and their profit margin. They have very, very low overhead. So their costs aren't increasing as much. So inflation probably actually helps Visa out more than most companies because they have a high gross margin. That means every extra sale they do, 80 cents of that goes as profit to pay overhead and taxes. Mo, go ahead with some comments here.
So here's something, I pulled this up on the morning show and it fits in perfectly. So credit card balances grew in the fourth quarter by $61 billion, totaling $986 billion. That's bigger than it was pre-pandemic. So this is a good thing for Visa, a company like Visa. Credit card debt usage, whatever, is continuing to grow. It's only a good thing for Visa.
Now remember, if we hit a recession that's big, 70% of GDP is consumer spending.
Yep. That'll
definitely hurt them. However, again, if inflation's high and continues to stay high, they can accommodate some of those losses, some of those decreases in that consumer spending with inflation money. Okay.
And the interesting thing is, if you go back and look at the revenue from 2007, 2008, I mean, even through the Great Recession, they just continued to increase. So
look at their profit.
Let's see what their profit did. Net income. I mean, it was not 446 million. There was your loss in 2007.
Yeah, but that loss is other income expenses.
And then it started to increase. So yeah, exactly.
They still made money, guys.
This is, I don't like saying that stocks are recession proof, but this seems like it kind of fits that bill if you want to put a definition on it.
Now, according to analysts, they're going to make $8.45 per share this year, increasing to $14.10 in 2027, which, as you can see here, it's pretty decent growth.
Yeah, it is. Especially
low
for a
double
company this
digits,
size.
especially for a company of this size.
And who doesn't have a Visa in their pocket? I think I have a couple of them in my pocket right
Yeah,
now.
I have two.
Yeah, so who doesn't have one?
And year-over-year growth, revenue growth, not huge, but when you have such a high gross margin, you can really drive the bottom line profit up much higher with lower growth rates. So remember that. Such a high gross margin, 80% of every extra dollar in revenue is going to pay down, to go pay overhead and taxes. 80%. Microsoft has a 68% gross margin. 68%. Visa is at 80%. That's a huge number. As you guys can tell, it's a company that I want to own for a very long period of time. So the question becomes, what price do you pay for Visa? So we're going to use our stock analyzer tool. It's been used 1.3 million times last year by our users. You can join the community and talk to people as part of that $7 for 7 days and use the software. I'm going to do a 20-year analysis. Mo will do 10-year. But before we do that, let's talk about a few bull and bear cases for Visa. So Mo, why don't you start with the bear cases for Visa?
So a lot of concern has been surrounding Visa over in the EU, especially when it came to Amazon. They were talking about getting rid of using Visa on the platform, et cetera. But right now in the EU, it is heavily regulated by their government. So that is a little bit of a concern because 35% of transactions in the EU are done on Visa cards. So that is one little scenario that people are wondering about. When you start reading through bearish cases, that's something that you find. So following up with that, you could see lower fees coming out of Europe, especially on the Amazon side, and that could...
Yeah, but even I look at that going, are they really gonna, I mean, is that just over worrying?
Like to me, when I start looking through bearish cases and I see something like that, I'm like, yeah, I'm not super concerned here. They're still gonna be making money.
Exactly, and not only that, I just have a hard time believing that Visa isn't gonna figure out some way to be in
100%.
everybody. Yeah, they're a staple in everybody's life. I mean, everybody has Visa.
Exactly.
So bullish case, that'd be one. Everybody, I mean, the moat is huge. They basically operate as a duopoly with MasterCard. It's Visa and MasterCard. And even then, the difference between Visa and MasterCard is huge.
Huge. Everybody has Visa.
Correct.
Not everybody has MasterCard.
Correct. In fact, do I have a MasterCard? I don't think I do.
I have a MasterCard.
Do you?
I have it through Apple.
Oh,
Apple
got it.
credit card is MasterCard.
Gotcha. Another bull point. Even with the loss of Russia on the credit card fees, 10% increase in the fourth quarter on their transactions that were charged.
Wow.
That's a huge number.
Yeah.
With Russia being gone completely.
Right.
Okay. And I don't know if it's completely. I shouldn't say that, but Russia,
Probably
there's a lot of things going on with Russia.
Yeah.
But the whole point is inflation has helped Visa enormously. So finally, just to give you an example, payments processed, they're about double MasterCard is, and about 8 times larger than American Express. And American Express has its own, we like American Express too. We both have an American Express. It's considered whatever, but Visa is the go-to for all of these transactions. And that is a huge moat that is very, very difficult. Like I've said before about other companies, if I gave you $500 billion right now and said, go replace Visa, how are you going to do? It's going to be difficult even with a check for $500 billion.
And another thing that always sticks out to me about Visa is you will walk into places and they'll say, we don't take American Express, we don't take Discover. MasterCard. I've never walked into somewhere where like, we don't take a Visa card.
Everybody takes Visa.
Exactly.
All right, so let's do our analysis. Mo's going to do 10 years. I'm going to do 20 years. And what we're trying to do here is create our calculation for the present value of future cash flow. That's what this software does. It says, hey, listen, we don't know the future. Make your estimations on revenue growth, profit margin, free cash flow margin, assign a multiple to the company, and it'll tell you based on that and without the balance sheet, what you should pay for the company today. So I'm going to put my numbers in. So basically, I think, Mo, with Visa, it's basically where do we think GDP is going over the next 10 and 20 years? What kind of growth rate are we going to have?
So I'm actually... on my high side, it's going to be pretty high, but I'm looking at it saying they expand into other markets that are not developed right now.
Correct. I would agree with that. Their 10-year, there must have been a write-off or something, because their 10-year number is a lot lower than I expected. Okay. Oh, and the free cash flow is higher, which we love. So guys, we've done Visa before, and every time we do these, we come up with different numbers. And that's kind of the art of investing. We're always making estimations. And the low number could be, we could see numbers that are 3 or 4 times on the high end versus the low end. That's okay, especially as you go out further and further. As you go out further and further, the small changes span like that, right? It's much closer, and then further away as you go further. So Mo, tell us your numbers for the 10-year analysis.
So I did 5, 8, and 11.
That's exactly what I did for my 20-year.
Okay. Profit margin, 46, 50, and 54.
Oh, I did 47, 49, and 51.
Okay. Free cash flow margin, 50, 54, and 58.
I did 52, 55, and 58.
Okay. PE, 15, 16, and 17.
I actually did 15, 17, and 19.
I struggled with this PE. I think I agree with yours more than mine. Same thing for price to free cash flow, 15, 16, and 17. And my return, 10, 12, and 14.
Exactly like I did. And what I'll say about this PE is, Mo, with such a high gross margin, such a high bottom line margin, such a high return on invested capital, I even feel like 15's too low.
I do too.
I look at this going, no, I want to pay a ton for this company.
I almost put in 16, 18, and 20.
Yeah.
I'm going to change mine.
All right, I'm hitting the analyze button. On my 20-year analysis, the price I got was a low of 125 to 140, a high of 200, and a mid price of 150 to 175. It's on my watch list at 150, but I'm going to change that because I probably did that on a 10-year analysis with much lower expectations. I'm actually going to put it at 180 now.
So my numbers are 118 to 128, 186 to 199, and middle ground probably about 150, 155, and it's on my watch list at 180. I'll probably keep it around there.
And by the way, in just 4 months ago, it was at 175. So guys, $7, 7 days, everythingmoney.com. Check it out. If you're new to the channel, subscribe. Thank you very much for your time.